This is our webinar, and this is CLIQ company. My name is Olga, and today we are going to talk about fundamental analysis and about trading during news releases. Fundamental analysis, it's interpretation of the statistic reports, economic or macroeconomic indicators, and news flow. And it comprises two big categories. So it can be divided into news itself and into economic indicators. Let's talk about news. So news can be expected and unexpected, and they can be political. For example, it's like parliamentary or presidential elections, or they can be economic. It's like summits or speeches of the prime ministers and ministers of the countries, or the speeches, which is more important, of the presidents of the central banks. It's like J7, J20, and different meetings of Federal Reserve System. And natural and mostly unexpected are connected with, if in case of political, it's revolutions and wars, and in case of disasters, we are talking about floods or earthquakes or tornado or tsunami. And we have different names for that, like force majeure. So these are events that nobody can predict. And whether we are talking about news or economic indicators, they have all a certain impact on the price movement. They can be positive or negative. And according to this, we are going to open sell or buy positions. Talking about economic indicators, actually the number of economic indicators is numerous, but we are going to talk about the most important and about which have the most impact on the markets. And first of all, we are going to talk about GDP. It's like gross domestic product. It's one of the most influential indicators in the market, and it measures the total value of all the goods produced by the country during their reporting periods. If it rises, and by the way, how do we understand if indicator is positive or negative? You can find indicators in indicator calendars. You can use the internet, there are lots of them. And we can suggest you to use www.investing.com. So in this indicator, you see the news, and if it's red, it's negative. If it's green, it's positive. And we always compare the previous data with the present one. So if GDP indicator is green, or it's actually bigger than the previous one, it's very good for the economy. And of course, we are going to open position for buy if we are trading US dollar. If we are trading euro, of course, we are going to open sell. So all the news are read and understood in accordance with the country which has the most influence in the market. It's the United States of America. So we take into account, first of all, these news, and then the news of the country, which currency you are trading. Okay, trade balance. It's also an important indicator. It comprises the total value of import to the total value of export. A negative value indicates that actually more goods were imported than exported, and we trade sell. And in case of positive balance, export exceeds import, so we open buy. Next is interest rates. Central banks, most central banks, maintain so-called a benchmark, so it's interest rates, at which central banks and other commercial banks lend funds to each other just to meet any operational commercial needs. And in case of inflation, for example, the high growth of the currency, the central bank can actually increase the rates. In this case, we open buy position. In case of deflation, if deflation is the problem and the economy of the country needs a boost, the central bank can lower interest rates, and in this case, we open sell. Next, unemployment. And subdivision of unemployment is non-farm payrolls and jobless claims. It's so important indicator that actually it has a certain data, time and date of its release. Actually, it happens, you can find it in economical indicator, calendar, on the first Friday of every month in the evening. They follow one after another. So unemployment, as we can see from the title, it measures the quantity of unemployed people, and in case of increase of the unemployment, it's a negative indicator, as it implies that more and more people don't receive regular salaries and the consumer spending will decline. It's bad for the economy. Economy is down at that period, and of course we open sell position. If indicator is less than the previous, so it's better for the economy, we open buy. Non-farm payrolls. When you see this title, be very attentive. It's a very important indicator. So it also has unemployment, as it is a subdivision of it, shows the actually change in the number of employed people, excluding farming industry. That's why they call non-farm payrolls. Also, in case of positive data, it has a positive effect on the USD. We are going to open buy position. And likewise, in case of negative reports, we are going to open sell. And the last indicator, it's new home sales. Actually, this index represents the change in the number of new constructed homes sold. Actually, it's an indicator of economic health of the country. So if it's positive, of course, it grows, we open buy. If it decreases, we open sell. So this is shortly about all economic, very important indicators that will surely make effect on the market and move the price. Regarding the movement of the price, talking about trading the news, I would like to mention it's very risky. And should you wish to choose it, you need to follow recommendation that we are going to give you during this webinar. And we're going to present to you a trading strategy which actually showed great results while the high volatility of the markets. And also we had some questions during the previous webinars if our trading strategies work with binary options. So straddle trading strategy works as well with the binary options. So you can use it also. You can use this strategy also while trading this. So what happens when you decide to trade the news? Before the starting, you need to do some setup. And you need to use straddle strategy in two ways maybe. First, you're not sure in which direction the market will move. And for example, news, you don't know if the news is going to be positive or negative for the markets, for the currency you are trading. Or a second variant, you're expecting some positive news because there are rumors, and sometimes traders already know, and big players for sure know, which actually news it would be, but sometimes they are caught actually off guard. It's a big surprise in case of unexpected news especially. That's why you actually anticipate the price to move in different direction, meaning news is positive, but the market jumps up and down, and actually the prevailing tendency is upward, but it's so volatile that you can't actually understand in which direction you should open the trade. So in this very risky situation in the market, straddle trading strategy is for you. How does it work? We're going to present to you 3 modifications of straddle strategy. And first one is classical. So before the news, 10 minutes before the news, any currency pair, Euro USD is better. Actually, more news factors actually. You make the following setup. First, you set up 2 opposite orders. Straddle strategy has its name because actually it gives you a chance to open 2 opposite orders at the same time. So by doing it, you are locking the price in a special corridor. If you were following our previous webinars, you remember about the tactical methods. So we were talking about tactic of locking. So exactly this tactical method we're using here. So you set up your buy stop and sell stop, and the distance between them is 50 pips. So you just somewhere here. And before, one more detail. Before the news, sometimes market is consolidating. So the market is actually ready for the news. It's like it's low. Everybody's waiting. Some tension is expected. So you just calculate 25 pips above the current price will be your buy stop. 25 pips below it will be your sell stop. You set up your stop loss exactly, or a few pips higher or lower, your buy stop or your sell stop orders. And you have your profits 20 pips. You have two ways of actually elaborating of this scenario. One is good. So for example, news is positive, market is going upward, your buy stop order is triggered, and with the high volatility of the market, 20 pips for the market during the news release, it's nothing. So you close your position with profit. Good scenario, variation number 2. News is negative and the price goes down. I forgot to tell you, that's very important, sorry. Even before the first variation, news is positive and your buy order is triggered, delete sell stop immediately. It's not relevant anymore, so delete it. Variation number 2, news is negative, so your sell stop order is triggered. You're failed and you close your position with 20 pips of profit, delete your buy stop immediately. Okay. Worst case scenario. You didn't have enough time, you forgot to do something that I have mentioned, so you forgot to close your not relevant opposite order. Or market is so volatile and so fast and moves so quickly that actually both of your orders are triggered. But nevertheless, as you are using this straddle strategy, you still control your risks. Whatever happens in the market, whatever situation is, you will have only 50 pips of your loss, not more. Okay, a situational variation of straddle strategy number 2. Even to reduce your losses when worst case scenario happens, we propose you to use trailing stop. The setup is the same with only additional detail. You set up your trailing stop from 5 to 15 pips. It's enough. In this case, even the worst case scenario, you will actually exit the market with 0 profit or even with with 0 loss or minimum with profit. And variation number 3. It's called straddle trading strategy modified 2. The setup is the same, but with some details. First, before the news release, 10 minutes before that, you check that you own Great Britain pound USD, because only this currency pair gives us such opportunity, and you are on 5 minutes time frame. We choose this currency pair because we need volatility of the market, unexpected movement. The straddle strategy exactly for that risky situation. So what you're gonna do is 10 minutes before release of the news, you set up 2 orders. How you identify where to set them up? You check for the price and find 2 highs or 2 lows, last 2 highs, last 2 lows that the price have reached. And you can use shadows or you can use the bodies of the candle, it doesn't matter. You draw horizontal lines from that levels. We are going to set up 2 buy limits, 2 sell limits. Sorry, upwards is sell limit, so we are going to sell from here. And from here, from the low levels, we are going to buy limits. You set stop loss at 40 pips. The stop losses are over there, very high, very low. And you set up your take profit 15 pips. Only in this case, you are going to succeed. I will show you examples on the real markets. This is first straddle, classical way. So how it works? This is actually 8 o'clock, according to the current terminal. This was a speech of Mario Draghi. He's the president of the Central Bank of the Euro Union. So at 8 o'clock, it starts at 8 o'clock, you see the market starts moving. But 10 minutes before that, you're over here. 25 pips above, buy stop and stop loss for the opposite order. 25 pips below sell stop and stop loss for the previous order. Market moves in the downward tendency, so your sell stop order triggered. Delete your buy stop immediately. I will show you. Delete. Don't forget to do it. And with 20 pips, you actually succeeded. If market, for example, you see it turns against you over here, a few pips lower, and oops, unpleasant situation, you use trailing stop. If it happens a little higher, with trailing stop, you still can exit the market with zero profit or with profit, minimal profit. This is how classical straddle strategy works, or modified number 1 with trailing stop. How actually works straddle strategy modified to you? We use GBP USD 5 minutes time frame. So we are somewhere here, 10 minutes, but this same event, 8 o'clock, the news, the release news, the speech of Mario Draghi. You somewhere here, you actually find two highs. This one high, last highs. This is the second high. We see on the example, I don't use shadows, I use on the candles. And you find two lows, actually where the price has reached. Here, very prominent, and here. Okay. On the high level, you set up sell limits and sell limit 2. Here, you set up buy limits and buy limit 2. What we see here? We see that the market starts moving, and our buy limit is triggered. If you use trailing stop, you will succeed with actually market gives us only 11 pips. But with trailing stop, you will have profit even here. Our second buy limit is triggered, and here we had our profit. So you have already earned money on the buy limits. What happens with sell limits? Actually, with this shadow, our sell limit is triggered, and it closed here. We have our profit. And with this shadow, we have triggered our sell limit number 2. It closed a little lower. In 2 hours, you have to lead the market. Actually, if your order has already worked, don't use it again. Don't be greedy. So this is how both strategies work, and this is how the modification work. In the end, I would like to say one more time that trading actually news is very risky, but should you wish to use it, take advantage from the free demo accounts of CLIQ company and try to use these trading strategies with live prices. You need to keep it in mind. So all above mentioned trading strategies and techniques needs time and practice, which you can do actually using and trading them. We wish you only the successful tradings, no matter which situation the market is. Thank you for staying with us, and thank you for your comments and for your feedback. We appreciate it a lot. Goodbye. Have a nice day.